A majority of retired individuals in India depend upon interest income from fixed deposits or senior citizen savings schemes, etc., to manage their post retirement expenses. However, rising inflation and increasing medical expenses have made it difficult for senior citizens to make their ends meet. But many such retired individuals do have one asset that they can use to generate extra income: their self-owned residential property. Senior citizens can get additional monthly income by borrowing loan against this self-occupied residential property. This is called reverse mortgage loan. We are going to study in this video the features, benefits and terms and conditions of reverse mortgage loan. Let us understand what is mortgage loan first. Suppose a young couple intends to buy a house. They will approach the bank for loan by mortgaging the house in favor of the bank. The bank will pay the purchase consideration to the builder or seller, and the young couple makes loan repayment every month by way of equated monthly installments, that is EMI. And after the payment of all the installments, the ownership gets transferred to the young couple. Now let us see what happens in the case of reverse mortgage. In the case of reverse mortgage, if an old couple who owns a self-occupied property needs money for meeting their monthly expenses, they can approach the bank for finance. The bank pays them equated monthly installments, either monthly, quarterly, half yearly or annually, against the mortgage of the house, and eventually the ownership of the house gets transferred to the bank. So what is reverse mortgage? Reverse mortgage is a loan which provides additional source of income for senior citizens who have a self-occupied home in India. The borrower, that is a senior citizen, is paid by the lender, that is a scheduled bank or housing finance companies, against the mortgage of the self-occupied home. Eligibility criteria: the senior citizens should be above 60 years of age. Married couples will be eligible as joint borrowers if one of them is above 60 years of age and the other not below 55 years of age. They should be owner of a self-acquired, self-occupied residential property, house or flat located in India with a clear title. They should use their residential property as a permanent primary residence. The residual life, that is the remaining life of the property, should be at least 20 years. Now, why the bank will give the loan against the property? So the purpose of the loan: for medical or emergency expenditure, for maintenance of the family, for supplementing pension, other income, for upgradation, renovation, maintenance, insurance and extension of residential property, for meeting any other genuine need, but it cannot be used for speculative, trading and business purposes. So eligible loan amount: the amount of the loan will depend upon the market value of a residential property, the age of the borrowers and the prevalent interest rate. Banks can offer up to rupees 1 crore as loan under reverse mortgage. Some banks offer up to 1.5 crore to 2 crore as loan depending upon the location and market value of the property. Generally, the bank gives 70% of the market value under reverse mortgage. The property valuation is done every 5 years by the bank or the financial institution from whom the loan is taken. The maximum tenure of the loan is 20 years. Nature of the payment: the periodic payments are made either monthly, quarterly, half yearly or annually by the bank depending upon the requirement of the senior citizens. Lump sum payments in one or more tranches may be made in the case of medical treatment, subject to the maximum of rupees 15 lakhs. The maximum monthly payment is capped at rupees 50,000. Settlement of the loan: the loan shall become due and payable only when the last surviving borrower dies or would like to sell his home or permanently move out of this home for aged home or to his relative's house. After the borrower's demise, the property will be sold by the bank, and if the valuation is higher than the loan amount, the balance will be returned to the legal heirs. The legal heirs can also repay the loan to the bank and take the possession of the property. Now let us see two incidences. For example, if a couple takes a loan on their self-occupied property of rupees 1 crore and the bank sanctions them a loan of up to rupees 70 lakhs against their property for a period of 20 years, and after 20 years the couple is still alive, then the bank cannot sell the house till the last surviving member is alive. Case 2. In the above example, if the couple survives only for 10 years and the loan availed by them is to the extent of rupees 35 lakhs, then the bank will sell the property and settle its dues of principal and interest, and after the dues of the bank are fully settled, the balance amount will be transferred to the legal heir of the couple. Foreclosure of the loan shall be liable to foreclosure, that is early closure, if the borrower has not stayed in the property for a continuous period of 1 year, the borrower fails to pay the property taxes or maintain and repair the residential property, or fails to keep the home insured, the borrower declares himself, herself, or themselves bankrupt, the residential property so mortgaged is donated or abandoned by the borrower has given on rent part or all of the house, the government under statutory provisions seeks to acquire the residential property. In these cases, there can be the foreclosure of the loan by the bank. Now let us see the advantages of reverse mortgage. Tax benefits: the amount received by the individual as loan from the bank, either lump sum or in installment, in a transaction of reverse mortgage is exempt under section 1043 of the Income Tax Act. Better management of expenses in retirement. With a reverse mortgage, senior citizens can supplement a diminished income and continue to pay their bills. No dependence on children or relatives for basic expenses. They don't have to leave the current house. Instead of leaving the current home, a reverse mortgage allows senior citizens to stay near the family and friends even after the term of the loan has expired. Legal heir: the legal heir can buy the property after paying the loan, or can get the balance amount from the sale of the property after settling the bank dues. Now there are certain disadvantages of reverse mortgage. The interest rate is high compared to the normal home loan by 1 to 2%. The property tax, monthly maintenance expenses will have to be paid by the senior citizens. It will not be borne by the bank. No payment will be received after the tenure of the loan is completed, even if the senior citizen couple is surviving. Legal heir may not like the idea of giving the house on reverse mortgage because they tend to lose the property which they can get by inheritance, and it may also negatively impact family relations. Thank you. If you like the video, please click on the like button and subscribe to my YouTube channel.